Hey everybody, I'll be getting rolling here in just a minute. Just taking care of a few things on the back end here, and I'll be live shortly. For those of you in chat right now, if you can do me a favor before I actually go live, can you let me know how the microphone volume sounds? Thank you, Jedi. Mr. Jedi Leroy. Appreciate that. Thank you, Spin. So I see, so far chatting, I see there's other people here, but I see chatting, I see Spin. Hello, sir. Jedi, hello. And Bobby, hello, sir. I'll take your first comment there, Jedi. All right, opinion real quick. Should I have music in the background while I'm streaming, or should I shut it off? Should I go Roman style and keep music in the background? Or shut it off and you can just hear my fabulous voice a bit crisper than usual, maybe. Music might not be for everyone, so. Some Viking music. You like the music, at least for now? Yeah, I mean, I can keep it rolling. Waiting on a few others that are like, wait, I want to see the beginning of the stream, so give me just a minute here, see what they're doing. Because I know they have some things to do. From outside the YouTube chat. Message says, bro, why you always be streaming when I'm working? Because this is my work. Well, trading is my work, not streaming, but charts and tunes, a good combo. Okay. Well, I mean, it's not like I have a massive subscriber base that I would piss off by keeping the music on, so. All right, so I'm gonna turn the music down a bit here so I can get the intro to this rolling. All right, so let's get this rolling. Make sure I got everything in the right place here. Take a sip of coffee real quick. Hello and welcome to Market Madness Thursdays here on Landy's Crypto Corner with me, Landy. We're going to be taking a look at Bitcoin as a follow-up to the Bitcoin in 60 seconds videos on both the longer term timeframes, and I'll do some lower term timeframe analysis. And then we're going to take a look at Dixie, that macro low that was on Dixie that everyone said, yes, it's going to bounce here and then it's going to take out the local highs. So basically calling for a macro low before it was in. And we'll also take a look at U.S. Treasuries. Just popped my knuckle right into the microphone. My apologies there. But yeah, let's start out with Bitcoin. We have hit the upside targets that I was referring to in yesterday's video, the Bitcoin in 60 seconds video for today, with the $31,000 target to the upside, the 31.5, and we have now spiked into the 31.8 overhead resistance. And as expected, it's an initial rejection from there. And I would expect no less at a major support and resistance area. So this does need to be flipped into support. And that's where I had mentioned in the Bitcoin in 60 seconds video, if we do see closures above here, I will reevaluate or evaluate expansion, because we are just beginning to see the etchings of expansion if Bitcoin does close here or higher. Well, really now, as the Bollinger Bands have reacted to price live, that would be above 31,225. So, and that's how you talk. 31,225 is going to be the upper second standard deviation. Closures above there will get nice expansion of the Bollinger Bands. I do suspect that if we see a closure above the upper second, we're going to get that initial pop of expansion, but the upper second will chase price, close over close. So I imagine it will be somewhere around the highs or slightly higher, and in between the highs of the range and the overhead resistance. Now, that might change a little bit if Bitcoin does close above 31.8 by end of day, but we'll have to evaluate and see. Again, for those of you that were in the live stream, the last or most recent one earlier this week, what was it, Tuesday? Man, it's been a busy week for me streaming apparently. I had mentioned that overhead resistance is, oh boy, this is not the right chart, but that's okay. This is my chart that you see on the Bitcoin in 60 seconds, and I don't have things organized. So give me just a second here to turn everything on individually so I can make sure that it's the right stuff. Okay, so this daily SR level just above the daily, weekly, monthly level here at 31.8 is at 32.4. This lined up previously, and I had mentioned this on Tuesday. It had previously lined up with, the weekly. And now you can see, because we have some intra-week volatility above the upper first standard deviation, where there is weekly support, by the way. So this was kind of acting as support and resistance on the lower term timeframes below the weekly. Excuse me. Now, digging into that overhead resistance at the daily, weekly, monthly level, And we had previously seen that the upper second standard deviation was right around 32.4 at that daily support resistance area. So that is just a daily level. It's not a big one for me, but we can see that the weekly upper second standard deviation has moved slightly above it to just under 32,600. So good. Now, the other thing to look at, if we do see closures above that 31.8, in addition to that daily support and resistance area, is for price to head up to the 2-day upper second standard deviation. Now, this is important if Bitcoin can close a 2-day up here, specifically above the wick high over here and here at 31.5. If we do see closures above there, that would be a range break on the 2-day. The 2-day closes 2-day, and we would see BBWP rising further up. Oh no, I'm sorry. This is actually still coming down. That's right, because we are seeing the Bollinger Bands, the bottom set of Bollinger Bands are chasing. So in this case, because BBWP is falling or volatility is falling, we would see a volatility pop up, but because it's coming from the top side to the downside, because it is headed down and not headed off of a consolidation to the upside, meaning contraction of the Bollinger Bands down here. We have a pretty wide set of Bollinger Bands here on the 2-day. I had mentioned that, any kind of an expansion to the downside on Bitcoin, that's right, yeah. I had mentioned that if you saw the daily expand to the downside, that would be mean reversion on the 2-day. And in this case, we're still seeing, volatility fairly high, but I do think it would either go sideways and start to tick up towards that moving average. And what that means is you're likely going to see rejections around the upper second standard deviation if price makes it there. So be aware of that, as it does take a little while for the 2-day to turn. And close over close, the upper second standard deviation is still going to be moving up because the basis is still chasing at a nice, at a nice 1 to 2 o'clock angle there. So this looks pretty darn good so far if Bitcoin can close above these highs to at least go test higher and maybe even up to that upper second standard deviation. I wouldn't immediately be looking for closures outside of it, but that doesn't mean that we wouldn't see that. Typically, when we start getting into that upper second standard deviation or closures above, it would, of course, in this case, it would look like Bitcoin would want to at least try to get continuation up to the weekly monthly overhead resistance at 35K. But this is sitting at 33,260 now. So that would be an area to be aware of just above this daily resistance. Now, this is all predicated on Bitcoin getting above and closing above 31.8. So these are just possibilities and things to look for. So 31.8 on a reclaim on the daily, we would see nice expansion of the Bollinger Bands. We're already going to see nice expansion if Bitcoin can close above the upper second. But of course, this is expansion right into resistance. And it's not just one resistance. It's, pretty important resistance on the longer term time frames, but then that daily resistance just above there. There's the weekly upper second standard deviation. Doesn't mean that we can't see weekly wicks into it, even all the way up, and then come right back down. So just be aware of that. That's where you don't want to see what I was talking about prior, is some kind of a swing of this resistance and then a failure and a close back inside of this range around that 31.5 if we do see a break of it. So that would be your deviation fake out. That would be moving up and then right back in, and then it's more likely that it runs the other way and tests the expanded Bollinger Bands to the downside. So, but to be quite honest, you got to take the time frames closest to price action, right? So if you're going to look at the weekly, it has to be, you can look at the daily in the context of the weekly, but the daily, of course, is going to drive how the weekly closes. And right now, this is very low volatility. So if we do, if we do start seeing expansion, it's going to look pretty good for further upside. Just be aware of those levels of overhead resistance, technical support and resistance areas, your horizontals, and Bollinger Band resistance as well, especially where it lines up with major closures. So in this case, Bitcoin looks pretty darn good right now. I will still be waiting to see closures above 31.8, and then I can refine my analysis based on that. And but for right now, I mean, it's headed up. And even when we look in the lower term time frames, let's go ahead and turn off support and resistance here. Well, actually, let's just go to this chart over here, where I had some zones picked out that I was trading the range in the past couple of days. We had the two rejections at 31K, no follow through to the downside, a little bit of a higher low structure already put in on Tuesday, and a little bit of a doji back test and then take off. This is how I would define this as an order block now that it is closed once today's candle closes above it. So that would be your liquidity zone down there for the daily for me. And most likely that area will line up with fib retracements and all kinds of stuff around that 31.5 to 8 area. In fact, let's go ahead and take a look at that. So let's get rid of this little short-term SR area. And let's just pull a fib real quick to get some pullback areas of interest here. It might help if I have the magnet snapped on to price. And let's drop down to an hourly and take a look. Okay. So the 618 is at 31K. That's the breakout of this particular move. So, a back test there, perfectly fine. No issues there. Wouldn't want to see things falling below the 50%, or it's going to be right back into test that 30,500, which would kind of be its bounce of last resort. You can see the way that the structure was built on the way up with this particular high to low fib pull. So on any retracements back to this 382, you're giving up the entire move up, right? So I wouldn't want to see that, but it could do that and still be fine. Just not the preferred look for continuation immediately, at least. And of course, that would just lead to further consolidation on the daily. But on the move up, you can see 272 held, 382 lift off, broke the 618, which was at the 31K highs, and it goes for a nice run. Initial rejection off of there as well. So looks good. Retracements back to that 618 to the 50% there. Perfectly fine and acceptable. I'd be very cautious if you see it trading back down around 30,500. Would not be a great look for the bulls here to give up the ground that they just gained. But again, I wouldn't be overly concerned until I saw some sort of a downside break, at least overly concerned for the bulls. I don't really have a concern for the bears or the bulls as I day trade, but I am in a I had a question come through earlier asking about what kind of position I was. You'll note that on Tuesday I'd mentioned I was short, but stops were flat and I had taken profit. And I thought I was going to get tagged out back here. So I was in a swing short position and I kept just taking profits on the lows of the range, just treating it as a range trade to the bottom side supports. I kept stops flat after taking my profit. I'm in a long, and I've taken profit at 31, 31.5. 31 was just to cover any kind of fees. Stop set flat. So, and then the real take profit for me was at 31.5, and I'm gonna let the rest of that trade run. I even sized it up a little at around 30,500 when that support was held on the hourly, and this confirmed a low. Of course, it came right back and tested again, but that close above the upper second standard deviation here. I had sized up that trade a bit more. I was building it on this little double bottom structure between the hourly and 2 hour just below there. and the spikes below 30,300, which is the weekly. So I'm basically, for the moment, I'm just in a long. I will probably bracket trade it back down once we see clear indications of a low-term time frame reversal, which we haven't seen quite yet. Might be soon though. Might even be now. So if I go silent for just a minute here, you'll know that I'm on my phone inputting some orders. So, but as it stands right now, I'm long. I've had some profits taken already. I'm going to let the rest run. Stops are flat. And if, whenever Bitcoin retraces back down, I'll evaluate, and I might even size that trade up again. We'll see. All right. Now, let's go ahead and take a look at some lower term time frame Bitcoin price action here. So beautiful, beautiful close right through the upper second and third standard deviations of the Bollinger Bands here on the 4 hour. And, nice little uptrending structure. Looks good. Never did get back to retest this low. I mean, retested just above it there in that order block zone. And, looks pretty darn good. So this demand candle held up price in through this little consolidation, moved up, rejection, comes back, and held it around the top side of this consolidation. Had a nice little order block on the 4 hour there. After this candle closed, bounced off of it, used that for fuel, and up we go. So one of the big things is BBWP is still expanding here. So the 4 hour is not finished. That's where you do want to be cognizant of volatility because the bands are expanding. This is a fairly quick move, so it can move back down pretty violently. And in fact, we can see the upper first standard deviation is right in that important area, that 618 that I just called out a moment ago, and that is at 31K. Now, of course, this will update at close of day and be higher than that, most likely even around this 31,350 wick high or so. Maybe even 31.5. Depends on how aggressively this next candle closes. It hit right into that overhead resistance, 31,862. So I would expect some lower term time frame pullbacks. I would evaluate consolidations, and from the way that this is looking right now, I mean, this thing is fine on the 4 hour above the basis band here at 30,660. And I do suspect this is going to update to somewhere around this high here at 30,800 to around, 30,900 area. Around the highs here is most likely where the basis band is going to end up at close of day today. So closures above there gives it some room to head back and test the breakout. So I think that would look perfectly fine, and I would evaluate the timeframes underneath the 4 hour for some juice off the lows that they would make in that case, because the 4 hour would be expanding to the upside, and if we're heading back down on the lower term timeframes, they would most likely be in a retrace or expansion to the downside, especially the lower term timeframe that you are looking at below the 4 hour, the lower term timeframes on the 4 hour here. Stoke looks great. Projected to end up in and around the bullish control zone in the next closure. Now, of course, this has been a struggle for Bitcoin here in terms of its momentum, but this is on a breakout. So, I mean, if it did turn in this area, likely we're looking at first pass rejection of that 31.8 rather overhead resistance, and then we come back to it later. And probably end up looking at a deeper retrace. Bulls have since we've been up in this range, but I mean, bulls have seeded a lot of their moves to the upside right back to the bears. So, it's all about where the daily closes, and then we'll evaluate day by day in the Bitcoin in 60 seconds videos. By the way, thanks for all the positive feedback on those. I know lately I haven't been adding the extra little edits to them, with the little arrows and circles, highlighting different areas. I haven't had time. We had a service dog in the family passed, and unfortunately it was attacked by another dog, and ended up hurt pretty bad, and then despite our efforts ended up with sepsis and had to be put down. So that took a lot of time, and was a bit painful, and then I had to catch up on all kinds of other stuff as well. And we're looking for another service dog to train. So if you're stateside and you know organizations that train service dogs, hit me up. The 4-hour BBWP looks beautiful. The 6-hour is another time frame to pay attention to. It has a cross up, and the next signal is going to be a fairly strong one right at the edge of the bullish control zone, which typically when you see a strong signal, unless it's just a straight up rejection in the next candle, this is going to be end of day close, close over close momentum for the 6-hour. Beautiful, beautiful, beautiful. And would most likely indicate that this is going to head to some either retest that 31.8 and possibly test up into 32.4 and maybe even higher. The way that you see BBWP taking off like this from close over close actually gave you the etchings of that move right back here on the candle before that closed above 31K. So that close open was very telling. In the lower term time frames, I mean, if you're a trader, you are already in a position at this point, or possibly hunting the other side of this, but you want to wait for confirmation on those lower term time frames, because the 4-hour and 6-hour blasting off right into your face if you're trying to short it. 8 hours getting expansion to the upside looks good. Need to see the 8-hour close in all the same areas as the daily above 31.5. Now I do want to be very clear. Just because it doesn't get a closure right away, I'm just looking for closures above there. And when I'm talking to you guys in the Bitcoin in 60 seconds videos, note that I'm talking about expansion based on closures, because when the candle closes is when the expansion is, or contraction for that matter, is confirmed. So in this case, looks good. Same area even as the 6-hour. Got a nice little cross up. This would complete a cross here or higher on the 8-hour chart with expansion. Looks freaking beautiful, man. This could lead to range resolution, but again, like I just talked about earlier, that overhead resistance is something that you want to watch, because you don't want to see a range deviation. That's where you can, jump in everybody's Twitter stream and YouTube live stream and scream bull trap. Yeah, but most people hopefully wouldn't be listening to the bull trap, bear trap talk. Just trade the chart. In this case, the 12-hour is also above the upper second standard deviation. Needs to, of course, again, close up here. But this is giving us the indication that this move is going to get rolling, and closing above the upper first second is going to be a positive thing for momentum and volatility to the upside here. And we got, again, we've got a little bit of a meme downtrend. So just be aware if there is rejections here. Again, first pass rejections are normal. It's all about where things close, I would say, in this case on the daily, on a close over close. So it can bang its head up against the resistance. You got to give it a chance. Don't just immediately the sky is falling, it's rejected. I would give it a little bit of a chance to get rolling. I mean, this has been quite a long consolidation. It's more about, does it break some of those important areas to the downside on any kind of a retrace in the lower term time frames, and then possibly give it the chance to run the other way on expansion, which sometimes those setups present really good buy zones. Now, I would say, if you were to do I'm going to answer this question. So yeah, why trend lines on Stoke momentum chart? Well, because a regular Stoch, unlike a Stoch RSI, a regular Stoch is close over close momentum, so it's price action based, and you can meme pattern the hell out of it, and often you'll see that it works. Not always. I mean, it really depends on the actual structure of whatever it is that you're charting. But in this case, this trend line on a Stoch, if it breaks, we're seeing higher prices, right? It dove much deeper on a higher low. Well, technically, when it turned, it had already put in the lower low, but when it turned, it was on a higher low over here for the cross. It confirmed that a couple candles later on a rejection candle. So, momentum had turned while price is higher than the last time that it turned, and that thus likely gives it more momentum availability to the upside because it's within the range. But realistically, I mean, it's close over close momentum, and just like a trend line on your price chart, it's going to kind of act the same way, just a little bit of extra confirmation. And if you like the meme trend lines, you can use it. And I do find it actually a little bit higher hit rate than actual trend lines on a chart. This looks good. It's, again, like everything else, right around the bullish control zone. And on expanding volatility, yes, we've seen the expanding volatility get rejected before. This has been a long consolidation, so it's more about the consolidation on the daily leading to expansion, and those lower term timeframes are going to expand and contract much faster during this time period. So we'll see what kind of appetite the market has over this weekend for Bitcoin. That is one thing that I would caution. So if Bitcoin hangs out here over the weekend and does not break out, it's likely, I would say from a time frame perspective, it's likely to go and test, the range again, even if it does close outside of it. So, all right. Any questions about that? Any comments? Hi, Baba. RSI? Yeah, I can check RSI for you. So on the daily, I think there's, it's this particular indicator is calling the low back here. You can call this a low. Technically, there is bullish divergence off of the lower low. This lower low. No, okay, so lower low, higher low, then let's see, what were we at? 30,074 back here. I'm just looking to see where it was calling the lows. This low it called at 30,074. This one was the lower low, and we have a little bit of a low side structure here. So if you were to look at a swing indicator, it's going to call this a low. Oh, no, it doesn't. No. Okay, so yeah, I guess that would be no bullish divergence then. Yeah, no bullish divergence, but it looks fine. You can even meme trend line the RSI here if you like, by the way. So if you're looking for bearish divergences, what I will say is break into the bullish control zone. Looks good. It's caution around these major areas of resistance. So that's why I'm not talking like full bull mode. I want to see the expansion. I want to see closures above 31.8. I want to see what expansion of the daily looks like in comparison to the higher term timeframes and the lower term timeframes if we do see a closure above 31.8. And I suspect if price pushes above there, 32.4 and possibly even that 2-day at 30, around the $33,000 area is, fair game, right? So, I mean, if we zoom out, there is 2-day overhead resistance at 32, 32,300, so 32.4. That's that consolidation. There's another low around $33,000. That's like a 2-day, 3-day, I believe even a 5-day low area. But it's a wick. Yeah, it's a wick low. I'm more interested in those closes that are a little bit higher, but for short-term overhead resistance that could create a a potential swing fail or a range deviation play, fake out. That's likely where you'd see it if it spikes up above 32.4 and then heads back and it even starts closing in that resistance with or breaking below it and closing below it rather at around that 31.8. Then it's likely you don't want to see it regained and then lost. That would be your deviation play. The weekly. Okay, so which one did you want me to look at? Yeah, the weekly still got that bull div. I mean, you could say that the easy part of this is already played out. I like to see meme head and shoulders patterns on RSI tag back to the top side, which would be 69.78. We can actually get a read on that on this particular RSI. As you can tell, I'm a big fan of the developers over at Crown's Crypto Cave. I'm sorry, Eric Crown Crypto, or app.crowntrading.net, or whatever you want to call it. I think this is a Mornfall indicator. I don't recall, but you can. There's lots of indicators like this that you can get that are free. This just happens to be a paid one. We can move the bull critical zone down to 69. Nice, and see what. Or we can say bearish divergence would be built there, so we got to go above it. Let's do 70. And then we can actually get what the price would be or need to be to break above that and nullify bearish divergence. And that would be 34,857. Now go figure, 34,857 is right around a weekly area. So that would be your, it would need to break out above this weekly resistance, overhead resistance, around that, just underneath that monthly resistance at 34,760. So I don't think that would be a first pass breakout, but essentially what you'd want to see is like a move that comes up here, holds, moves up, and then holds, and then tries up again. Maybe even gets a little deviation under, fake everybody out. They get all bearish. I'm not a meme pattern guy. I'm not, I'm not going to pull echo candles out, and I'm not going to assault your eyes with projections and bar patterns and stuff like that. But, in terms of volatility, you want to see it just get above the support, hold it, make a run to the top side, and then come back. XRP got a lot of crazy fans. Yeah, XRP is gonna go. For those of you that remember or have watched the video, I did a XRP video like 2 months ago, where I was like, is it ready for a breakout? Is it bullish? And basically my assessment is no, it's not ready yet, but if it breaks, 56 to 58 cents, eyes on, because it's going to rocket ship itself. Now, of course, on the daily here, this is a news candle, right? But how could we have ever predicted it? Well, we have a lower low on divergence that was set here. So this was a closing lower low that held the wicks and then set that low on the 10th. So that was Monday. Came back tested it, didn't close below the open, rocket ship when the news comes out. So, but it's beneath the 618. It's going to fall. Oh no. Well, candle structure matters, and not getting closes below these wick lows over here at around 45 cents. And then putting in this particular low and back testing around it while setting it as a low looks pretty darn good. I mean, that's a little scary in the lower term time frames for people who had just bought that area, but you've got an order block right here on the Sunday candle. You've got a back test of the closing lows in the same candle that closed it. You've got another back test of the consolidation area and the order block, and then boom, up we go. I mean, I suspect alts were going to move up versus US dollar anyway on any kind of a Bitcoin move up. And you're going to get everybody saying like, oh, no one could have ever predicted these things. I mean, how long have I been calling, like, if Bitcoin starts to get above 31K, we need to see closures. It's going to go test 31.5. I mean, we haven't seen closures. I mean, every time it's been tapping on 31K, we weren't getting closes up there. Tapped on 31K, look out for 31.5 to 31.8. Where'd we go? I mean, that's just simple support and resistance. Now you throw in the enhancement of understanding volatility, which the bands help you do, then, these kinds of things can be easily predictable, especially when you're watching on lower term time frames, keeping track of trend, momentum, divergence, that kind of stuff. So, all right, so let's get into something else here. All right, I'm going to rant a little bit. I'm going to rant a little bit about people who don't understand what they're talking about and then make declarative statements that are factually incorrect and misleading and have large followings. Many of the macro fiat shills, and yes, they all know who they are, have been saying that this here on Dixie, so this is the Dixie one-day chart, US dollar index, is, we've got a macro low on Dixie. No, we don't. Not even close to a macro low. Now look, a macro low would be on macro time frames. I'm gonna zoom out for those of you that maybe don't understand what I'm talking about here. Does this look like a macro low or a consolidation? What does a macro low look like? Well, in this case, you can see that the area that it was holding support, it's pretty clear. We can take our trend line, shoot it off to the left, and after bouncing off of the highs here at 102.25, it went down and tested into the actual wick highs over here and very close to this high here, but basically testing down into the $100 region. Now, why wasn't this a macro low? Why are all the fiat shills so wrong? Well, all the time. The fact of the matter is a macro low, you need to see a low set. There was no low set here. There was a low set here. That doesn't mean it's a macro low just because a low is set. So on the monthly, we've got this candle here. So we have our downtrend, get the bounce, we get the close. Low is set, right? Technically, didn't pass the wick high though. Now we have another down candle down into support. Low is set. Macro low? No. It has to break the highs. Only if it breaks the highs and then retests and or makes a new higher high can it be considered a macro low. You can get higher lows. This was a lower low. This is a lower low set. There is the high here at 105.88 that needs to be broken. If that is broken, then this would have been set as a major low area. Not a macro low, still a major low. It needs to either make a new high and then come back and make a higher low and then push up past whatever new high it makes. So for instance, we're going to ignore the fact that this is not a macro low, and we're going to pretend that we are back in June, because this bugs the crap out of me. There's so many macro analysts on Twitter and YouTube and like all these. You can tell, and even the economists, you can tell they've never traded a damn thing in their life. It's obvious. And what did I want to look at here? Which tool do I want? Let's do the path tool. So we've got this guy here, right? We've got the high being put in here. We've got the low, and that is a lower low right on support on a close. What would you need to see? You would need to see a higher high, right? That then makes this a major low. That this double bottom major low, not yet a macro low. Price either needs to go and break these highs on a close and take out the wick high, preferably, and or come back, make a higher low, and then push up. On this kind of a structure, this higher low, once that's confirmed, then this becomes a macro low. It's no longer a major low consolidation to a breakout retest. It is now confirmed as a macro low, and then you are looking for it to go and take out the highs or make higher highs. Now, the other way to look at this, what's the other way you can see this as a macro low being set? Well, we can have that same structure, right? And then take out this high and go and make a higher high. Now, as soon as you make the higher high, this is a macro low. Doesn't necessarily mean that it's going to hold, though. For a true macro low, you want to see the high broken. You want to see a higher high in trend, not in relation to the last trend. You want to see a higher high built in trend, higher low, go. That is what you're looking for. And I've watched people that I respect call this a macro low for months. I mean, the first candle tap on this support area, they were calling it a macro low. Also, they were wrong because they were looking back here at 102.14 or whatever this is, 102.50, 103 area, and it closed below, and they're still calling it a macro low when we're still seeing it mean revert back to the basis. What is happening now is that the basis was closed below, and we had one close below the basis, push back above, and then a close back below. Now it's a rejection. So this is your classic support and resistance play. Found resistance, and then where do you head on the macro time frames? You head down to the lower first when you're looking at volatility. In this case, lower first is actually a good candidate considering the run for it to start trying to dig itself out and turn this support break into a deviation. Now, there is precedent for that because this nice expansion to the upside after expanding to the downside, running all the way back to the upside, and then continuing through 2022. Now this is a mean reversion play, and because, I mean, this, you don't want to see this area taken out over here on a close around that lower first, because then it's likely to go test further down into this low structure. But there's no freaking macro low here. And I watched people like, even yesterday, like, oh, it's at macro support, it's at the macro low. Instead of saying macro support, they're saying macro low rather, when they should be saying macro support rather. And yes, it is macro support, and it broke down. And I had a good laugh because there was no structural macro low built. I mean, you can just look at the daily, and it is a downtrend. This is a downtrend, and in fact, you could even call this a falling triangle wedge pizza slice, whatever the hell you want to call it. It's got a flat bottom. It's got lower highs. It is classically in the pattern trader. If you're a pattern trader, that would be your bear pennant or your bear triangle rather. And There was no, even on the daily, there was nothing here. We had a higher high on the daily that was still in the context of a downtrend. So you have a trend break. Even let's turn off the bands. I know it probably sounds like I'm just arguing with somebody. I'm arguing with all of the people that I have seen online. They're my muse right now for whipping at this particular moment. But you got the trend break, right? You have the nice downtrend here. We get the trend break on a close here. We get the trend break on a close open right around here. It turns into a swing fail. Now you're looking for higher lows. We come down here. We technically get some higher lows in the more macro time frames versus this low over here after this nice rundown. And then it pops up and makes a what? A lower high. Oh, but it set a higher low over here. Good. If it sets a higher low over here, then it needs to take out the wick high here at 104.69. Nice. And if it does not, and it makes a lower high, then you watch this low over here, and that low is 101.92. And as soon as it closed below, what happened? Boom, down, even took out the supports below, all with momentum shift and with bearish divergences. Oh, let's go look at the weekly because, the weekly is probably really, it's looking pretty bad. Better bounce before Friday's close because it's going to give up its chance for bullish divergence as well. This thing is going to continue to head down. It's probably going to bounce here and there, but it's most likely going to continue to head down, especially when you take into consideration the nice big M for market maker over here. And then you get to the why. Why is this happening? And this is where I have a fundamental disagreement with just about all of the different macro analysts out there. The economic gurus. The ones who say, who contend either you have the we're already in a recession camp. We have the recession is coming, and the recession has been coming for. Let's look at remember market recession. The markets are dislocated from the real economy, right? So, but the numbers, are coming in, and jobs are up, and openings are down, and all this other stuff that they do to slush all the numbers, and then you get a big fight between the we're already in a recession versus we're already in a real recession versus an economic, a market-based recession. Well, the market keeps rallying off the back of all this news, and it's not going to last, and we're going to take out lower lows. Those people have been saying this for, let's just go ahead and measure this out, because they were still just saying this is just getting rolling. We're going to go all the way back, and we are going to ignore support and resistance and the consolidation prior to the breakout. We're going to go back and we're going to take out the March 2020 lows. These are the same people, by the way, the same macro analysts that are saying this crap have now told people who are potentially listening to their garbage to sit out of a 30% run up on SPY. This is ridiculous. Because they don't understand trading. They don't understand how liquidity moves and why. They claim they do, and they show you every different chart, the M2 money supply, the debt, the GDP. They're going to show you all this crap when it's really simple. Dixie's pumping right now. Okay? Gold had a nice little move up, but I'm not concerned about that. Dixie's not pumping right now. Dixie's pumping. The markets are pumping versus Dixie. Now, why is Dixie headed down? Well, there's many different factors for why Dixie's headed down. But who has the biggest impact on Dixie? Is it other countries? Is it the Federal Reserve? Is it the U.S. Treasury? Well, let's think about this for a minute. We know that the Federal Reserve has been bailing banks out, right? It is happening behind the scenes. They learned their lesson from 2008, and they let, SVB, SBNY, and a whole bunch of other banks have been getting, they get their books taken care of. They've covered for the FDIC, the overage in FDIC insurance. You can put in a claim for some of those accounts that were with SVB and SBNY and so on and so forth. And what happens? Well, the new entities that take over or buy out that debt, what do they need to do? Anybody know? I'm going to ask you guys in chat. Who knows what they need to do? They're taking on risk. What do they have to do? Let's ask this a different way. I've got bonds here. Let's go ahead and take the 10-year yield. You'll see that the 10-year yield is headed down. What's happening to bonds? What's actually happening to bonds? Anybody know in the chat? Who do you think's buying bonds? Because buying bonds is what forces your yield down. Who's the biggest buyer of bonds? Is it, Joe Schmo? Is it me? Is it you? Are you buying tens of millions or billions of dollars worth of bonds? Well, when you buy the bonds, and what the Federal Reserve is doing is they're keeping the Fed funds rate pretty high, right? They've indicated they're going to pause and or consider maybe even raising in the future, or we could not. Or we could, start to draw the rate down. Well, the longer that they can drag this out, the longer that bond yields can stay on the highs, which allows the banks to do what? They need to secure bonds as an asset against what? Their risks. You have the bigger players taking on more risks from the smaller players. You've got a bunch of roll-ups happening from regional banks. What are they doing? Well, a lot of times, why are they rolling them up? Why are they buying the regional banks? Why are they failing? Well, they failed to stay ahead of things and swap the treasury notes that they had on their books, and now they're upside down. So yeah, it was a big one with SVB. And then when the buyer takes over, what do they have to do? Now they have all this risk that they're taking on. They need to go buy treasuries. So what does this tell you is happening on the back end of the system? Well, it tells you that the buyers, foreign, outside of the United States, and domestic, are buying bonds. Yields come down. And by the way, this is a hedge in many different ways, because they're not going to, in 99% of the cases, they're not going to sit on the bond for through maturity, right? There's some section of that they keep as they can do liquidity swaps. They can do all kinds. It gives them a million different options. That's one of the reasons why the longer that the Fed can keep the Fed funds rate high, the longer the yields will stay on the highs here on the more macro timeframes. And it gives them what's called runway. And they can absorb bad debt and then secure against it. Now, that gives them two hedges against collapse. That means, we have a pivot in the market where the Fed pivots eventually and rates start to come down. Well, now I'm holding 10-year, I'm not just holding, 1 month, 3 month, 6 month and yearly treasuries. I'm holding a mix of them as I secure against the, yeah, I'm watching. I'm watching you. I see you typing in there. They have to secure against that risk. So they have to put assets on the books in response, right? They got to balance the books. So it's a mix of things, right? It's not just going to be treasuries. You have treasuries, you have gold, you have, typically it's CFDs on gold, by the way. You have actual physical gold, all kinds of stuff. But either way, they have to secure their books on the back end. This gives them runway. When the pivot happens, then they can also turn around and increase liquidity if they need to. If there's some kind of a run, they can begin waiting for a bailout, they can then also trade those high yield notes, U.S. Treasury notes, for liquidity as well. So as it secures against a run, because as the run begins, you're drawing down, technically you're drawing down risk, so you can let go of the higher yield notes and just turn over. So that's if it's run correctly. But you can see it happening. Well, why are, if they're buyers of, and we're not just talking about the U.S. markets, because private Western central banking system is run by the Fed. There's multiple Fed heads all over the world. You look to the IMF, you can look to all the big players, and they're all doing the same thing, and they're utilizing the U.S. Treasury notes in this way. And you see Dixie coming down with it. What does that tell you? It tells you that they're swapping Dixie for yield. And this is going to continue to happen because the market, the real economy is not doing well. And what is the result of this? The result of this is that liquidity for the little guy dries up. And you're already seeing that in restricted lending. You're seeing all kinds of consumer debt start to really spike in terms of like credit card debt. You're seeing pack-in rates above market value of like 4 and 5%, depending on what kind of loan you're getting and what kind of sector. So it ends up having this net effect of taking from the middle and lower class and transferring it to the larger system. And, you're kind of damned if you do, damned if you don't. It's inflation versus deflation. One way or another, it's being taken. And that's why you should buy Bitcoin. Anyway, that's my TED Talk. Thanks for coming. Any questions about that? Any comments? Any pushback? I want you to let me know. I'm going to hang for a second here. And I never did turn the music back up. But I'm going to turn the music back up a little bit here. Let's see what are we running here. Okay. So I'm going to watch chat for a second. I have a few messages. I can't say that on stream, dude. Not on YouTube, at least. It's funny, but I can't say that. I know. More so, other than you guys who are chatting with me outside of YouTube. Yeah, I know you can't log into YouTube from work. It's all good, dude. I want to see if anybody has any questions. So from the YouTube side of things, I can see there's quite a few people in here. Okay, you went over yield curve stuff, positive, negative, slope inverted. Yeah. Hey, Don. So any questions about that explanation of why is Dixie breaking down while bonds are going down, Dixie's breaking down? What do you think's happening there? It's US dollars going into US Treasuries for the yield. It's to secure against risk on the books from the banking side of things. And you're not having your regular Joe Schmo day traders are not moving these markets. I'm sorry. Like, anybody that tells you that is a fool. So Dixie breaking down, bonds also breaking down, tells you that US dollars are moving into Treasury notes for that yield. And to kind of extend on that thought, because if you understand how banks work and how they have to secure against risks and why they fail when they do not secure against those risks, They do have a lot of latitude, by the way, right? Between parking money overnight at the overnight repos and treasury swaps and all kinds of stuff. Like, especially because the Fed has even opened up a program that you can swap in your old garbage notes for the higher yield note. I mean, this is like the Fed is actually silently bailing the banks out behind the scenes. This is not something that we saw in 08. There was things happening behind the scenes that you could draw correlation to, but we were not seeing the same type of silent bailout behind the scenes to secure the back end of the system, which is why it, fell apart. But you can very clearly see when looking at Dixie, when looking at bonds, Dixie, breaking down from support is nothing surprising. And it's still, the people who call it a macro low, again, fools. But look at the monthly momentum, for instance. We've got a big high here. We've got a consolidation. And if this monthly closes like this without recovering back above the wick lows here, it's going to, further the thesis that this is going to run much, much lower. It has a chance to deviate, yes, but look at monthly momentum. Month over month momentum is down. Look at quarterly momentum. Quarterly momentum is ready to turn, and at the edge of the bullish control zone, no less. And not to mention, we don't currently have one, but we have long-term bearish divergence from 2015 to 2022 on the monthly, and I believe that does not hold true right now for this guy here. Okay, so when looking at monthly, it's the monthly bearish divergence, and then we have the quarterly bearish divergence as well. We got lower highs on the quarterly for Dixie, higher highs on RSI, and you have a bearish divergence. So this, from the quarterly perspective, the basis band is the likely area to be looking at around 98.25, give or take a couple bucks. If you're looking at the daily, again, we're looking at a quarterly, all the way down to even at 93. I'm not looking at the US dollar as being in free fall collapse, but this is painful on the drawdown. If it were to not bounce around the quarterly highs at around 99.40 or something, or slightly below there's support at that 98.64, right at the basis band. Basically, this is going to be an interesting way to look at it. And what this tells me about the system writ large is that everything's being hedged right now. So, I mean, the system is backstopping. So this is your transfer out into treasuries. Even right here, this entire drawdown is your transfer out into treasuries, and then the transfer back is going to be swift. So, any questions about that? Yeah, I see you. I know. I see you guys over there in the other chat. You're silly. Get in YouTube if you can. Yeah, nice. All right, so Bitcoin trading back below the wick highs. Not what you want to see, but we got exactly what I talked about. Was, break above the upper second on some closes, go run 31.5, 31.8. So my targets have been fulfilled to the upside. Closures above, this is going to keep fluctuating. The upper second standard deviation closures above here will beget expansion. I mean, even closures above the upper first are going to show you the etching of expansion of the Bollinger Bands. You can see that they're expanding equidistant from each other at first. So you do want to see closures above the upper second if you want to remain bullish. Doesn't necessarily need to close today's candle above there, but you want to see eventually a breakout close above 31.5 that reclaims 31.8, the overhead resistance, and then go from there. So I would tell you that this last little low structure, so we've got this low and then this consolidation to the wick high here and then the run back down to the lower first. You don't want to see closures below that lower first and the weekly support at 30,300. So that would be most likely a run the other way on the bands as they're expanding. So yeah. You want me to talk about this, my CBDC theory? Sure. Who wants to hear it? Anybody in the live stream want to hear it? You're talking about what I believe is happening with CBDCs and how this relates to the Bitcoin ETFs? Okay. So the basic theory is we know CBDCs are coming, and CBDCs are going to fundamentally change the system. One of the things that has to be done, though, in order to switch over to CBDCs is a siphon. It's not a seamless switch over like everybody keeps talking about. You have to move the liquidity. It has to move. You don't just hit a button and it's there. It has to be funded. So on the back end of the system, this is already happening. And when you do see the Fed pivot on rates, and one of the main reasons why you see bonds, we'll go right back to it. Dixie coming down, bonds, coming down as well with it. You're going to see them, bounce around. Like, let's take the 30-year, for instance. The daily went up to the upper third, pinned out. Now it's coming back down. I mean, simple momentum exhaustion. We had the consolidation breakout, and then it's right back in the range. Your falling channel targets get hit, all that good stuff. Momentum is going to stay down. It could try to curl back up. 2-day says yes, more likely than not. Weekly says I'm ready to head down, so we're probably going to see it bounce around a little bit on the daily, and the more around that 3.9 to low 4% region, right, for yield. So what ends up happening is the banking system backstops with the treasuries at the higher yields, hangs on to them through the pivot, right? So you have the pivot beginning to happen. Typically what happens around Fed pivot is we actually see things go down in many cases, but you end up seeing that liquidity re-enter the markets as the Fed pivots and credit markets loosen up and money gets easier. The liquidity has an easier way to flow, right? I'm trying to explain this without getting stupidly complex, but if you've ever worked in the markets, whether it's at a prop shop or directly on the floor, or if you've worked in a management position at a bank, this will sound, or as a risk manager or an RM guy or whatever, this should make sense. But for the layman, it's not going to. Yes, I know. It's going to make sense to you, but I'm trying to explain it in a way that will make sense to others that don't have that experience. For those of you on YouTube, I'm talking to a friend of mine who works in industry. He is he manages a prop shop. So basically, well, you can even correct me if I'm wrong then, but basically what you're going to see is as rates continue to, as the Fed pivots, when they do, because they will at some point, they're going to keep rates high. And then what do? They keep backstopping the system with these higher yield bonds that they will offer up for sale later, right? It's both a hedge and a way to move things over as well, because now what you start doing is you start siphoning off that liquidity into the new system, into the CBD system to fund it. And then you can also let go as you draw down into that system. You can swap those notes for liquidity to then further fund that system, right? Because it's a self-perpetuating. It's like a pump. Once it gets rolling, you're now siphoning that risk off into the CBDC system. Therefore, you can draw down on your yield, on your high yield notes a little bit more, and you just do a slow pull on them. And what ends up happening is that you can then take and that's silly. You can then take that liquidity, and the new system, what's going to end up happening is the CBDC system, what's going to end up happening to increase its attractiveness to the players involved and to regular people and traders and market participants writ large, is that you siphon that money off into the CBDC system and therefore funding it, which allows you to draw down your risk and your asset exposure, your risk exposure and your assets on the books into this new system, where it's going to be made attractive through yield. They're going to have this scenario where you have Fed funds rates come down, but CBDC rates go up, so that you can pull liquidity from one side to the other, because everybody's yield chasing, right? And when you move over to a CBDC based system, you need to take that that new risk coming in and hedge against it. And the hedge against it would be a CBDC based yield incentive and a set a lockup like you would in a bond that can be traded. So it would basically be your asset versus your risk, right? This gives them the ability to then hedge on both sides of the equation. You're hedging the CBDC system with your remaining liquidity that you have for your treasury notes that are acting as your asset versus your liability. And then you can overload one side just to protect against risk, right? Because it's going to be more risky on one side versus the other as you're transitioning through these phases. Where does Bitcoin fit into this? Well, the system and the central bankers are afraid of Bitcoin, because Bitcoin is an open ledger, auditable system. It's audited every 10 minutes, and it's a danger to them, because you can't play tricks, and at some point Bitcoin is going to be deeply integrated into every aspect of our lives. We can already see that there's power companies that are using it. The energy sector is where Bitcoin is going to be. That's going to be the next big play for the market at large, and it's all using fiat dollars, right? The fiat dollar system is backed by energy production. It doesn't matter. You could say it's war machine, it's this, it's that. But the main thing is at its base, it's all energy based, and it doesn't matter if it's petrodollar or even gold backed. It's still an energy based system, right? Because you need energy to be exerted to mine gold. So even a BRICS system that's gold backed. So how does this fit in with everything? Well, Bitcoin eventually will be integrated into the energy system, and it's already being done that. I shared a video the other day with some friends about a guy who's using Bitcoin miners to warm his pool, and he makes money offsetting. Basically, it becomes the way the math works out is it becomes carbon neutral. So if you're into the environmental side of things, basically the math also works out that it saves him money, because even though he's not making as much Bitcoin back, he's saving on the energy side from the grid. So because he's producing his own energy, so he's getting an incentive to do this. It's a net positive. Technically, he makes money by warming his pool this way. That guy has gone on to like do the math. A good buddy of mine has built an entire system around this kind of stuff as well. That particular video I shared was not somebody I knew. But here in California, a local gas company, they are running Bitcoin miners. And at some point, Bitcoin is going to become the rails for energy. And the big players know this. So what do? You get into a spot ETF position. Whether or not it's approved doesn't really matter. You position yourself to be first to market with spot ETFs. And spot ETFs then become the vector in which you can hoover up and hold a bunch of Bitcoin. They don't hold it. If it's a spot ETF, and the way that these ETFs are being written is that they are redeemable. And yes, you're going to see the Bitcoin maxis and, oh, they're going to fork the network. They're going to do this and that. Why? They don't have to fork the network. Their whole reason for doing this is because you can offer products that integrate. You don't need just the Bitcoin spot ETF. You now have an entire set of products that you can create and sell that are related to that spot ETF. They're enhancements to other funds, and like the possibilities are actually endless for ways in which that they could package this up. And they know that only a small portion of market participants are going to redeem are going to do redemptions for Bitcoin. Because why would you, when we're going to make it really attractive, where you can actually earn more through a Bitcoin spot ETF packaged up with all these other products than you would with just Bitcoin alone, for instance. Or, they can offer, retirement packages. They're going to integrate it into everything, basically. And they know that a small percentage of folks are going to do spot redemptions. It's just a fact. Will you have larger players in the game that do spot redemptions? Absolutely. But there's going to be a much wider market and open market for Bitcoin to trade on as soon as a Bitcoin spot ETF is approved. Doesn't mean it's going to get approved, August or whenever it is. Doesn't matter. The goal is to seize control of that market in some manner. You don't even need to fork it, and make it an attractive area to invest money in, right? And through doing so, while also switching over to a CBDC system, you're essentially getting Bitcoin versus a US dollar digital currency. It's on its way. It's already being beta tested on the back end. Here, it's all in other countries. That's all just a trial run. That's a dry run. Now, how does Bitcoin help solve this problem no matter what? It's a Trojan horse for them. I've always maintained that Bitcoin was a Trojan horse for the financial system. Bitcoin maxis hate this shit, and I would, I guess, consider myself a bit of a Bitcoin maxi, but if the energy side of things is running on Bitcoin rails, which someday I do believe it will be, it's the long game, because the entire system would be built on an auditable base at its core. And once energy is auditable, nothing can escape its audit or its grasp. Yes, there's a lot of pushback against that notion, but it is a Trojan horse, and I've always felt like it was a Trojan horse. It was never going to run up against the system and beat it. You have to infiltrate the system. It's got to become attractive enough to infiltrate and try to control. And then while you're trying to control it, it takes control. So that is that's the long and the short of it. So Maybe I hope I articulated that well enough. What do you guys over in this chat think? Yeah. So no, I'm not going to go that hard on a public stream, bro. What, you basically just want me to rail against some of this stuff? I mean, I could. I mean, I just already kind of did a little bit earlier when looking at you can just go search like crypto YouTube and Twitter, and you can see that you can very easily identify the people I was talking about in relation to Dixie, not knowing what the hell they're talking about. And by the way, they'll have like a million charts and reasons and like all this other crap. It's gonna, it's because of this, and this, and this is how you track it over here. And it's like, dude, I was looking at a simple candlestick chart and I could tell you that you were wrong. So it doesn't matter how much fundamental garbage you pull from them and try to dump on me. You were wrong. The charts will tell you the news. Just wait for your new narrative, and then go ahead and redefine what your position was, narrative to narrative. Meanwhile, actual traders are going to be looking at their charts, front running the shit out of you. That's about as harsh as I'm going to get. Okay, I'll go check. You guys won't see it over here. Let me go check though. Yeah. Okay. You want me to check on XRP? I kind of looked at it. I mean, it was the 56 to 58 cents. Once it broke out there, and it gave you the edge on Monday on the close. Yeah, so what did it hit? 93 cents on, which chart is this? This is Binance. I don't know, dude. I can re-pull this. This is an old fib. I think I have other extensions on this one. Let's see. Yeah, right through the 1618. If you change one of these to the 1786, it's probably right around there. Yeah, it's that would kind of be your zone, but that's more for pulls. I suspect it's probably going to close under the 1414. I mean, that's a big move. Yeah. I mean, closing outside of the upper second and third this quickly probably leads to it marching and holding on to its upper second at 62 cents currently. It's probably going to move up pretty dramatically. When it starts to lose that upper second standard deviation, I would keep an eye on BBWP and the moving average. So this is going to play catch up for a while. So the moving average is here at 30. BBWP is at 100%, so it's probably going to pin out for a while and stay there. So I'd be looking for, mean reversions that eventually come back and test around the 58 cent region as support. I would reevaluate and then, or evaluate, I should say, for setting a macro low, as it turns out. Yeah, so like, looking at the monthly, kind of already had the double bottom, nice order blocks being built on the monthly. Had this guy here regained and tested quite a bit, and then a move up. Do I think that this thing is like ready to moon past $1 yet? I mean, it could touch it. It's the upper third on the monthly. I don't really have an opinion as to whether or not it's ready to push up on the monthly, but above 84 cents. So I'm being asked questions outside of the YouTube chat by people who can't log in from their workplace to YouTube. Yeah, so I mean, this would be your breakout. Realistically, for the longer term, it's the same thing as what I was talking about on Dixie. You want to see the higher high, right, in relation to your local downtrend. So you got your trend break. You want to see closures above that 93 to 90. I'm sorry, it's 91 cents, 91 and a half or above. Looks pretty good. Of course, that would be above the upper second at 84. But in the more macro time frames, you want to see it come back and retest around these areas, set that area, and then go on a run, right? So that would solidify this as a macro low. The alternative to that is, you know, it just goes and takes out the high over here that's not the right thing. The alternative is it takes out this local high and the higher high. I mean, this is just a macro consolidation when you zoom out. So realistically, taking this area, this high out over here from this low side structure will solidify rather this macro as a macro low over here. So you'd have higher low, higher high. You know, also it'd be a breakout of the all-time high and a close. So, and then I'd be looking for this thing to run. I mean, pick a number. I mean, the last time that it had an impulse, it was pretty darn big. And then it's been mired in controversy ever since. So the potential for it to run is massive. Whether or not you think it's a good coin or not doesn't matter. Okay. Yeah, any requests? And then I'll take a look at the chat here. So I'm going to let you guys catch up. See if you guys have any requests over there. I just got a go ahead and look at Litecoin suggestion. I mean, Litecoin's tapping on the upper first on the monthly. We looked at this the other day. The daily lining up. You know, it's doing the same thing. It's lining up. Nice poke at the 786. We talked about that on Tuesday, I believe it was. Close here or higher. It's going to set a low. And, you know, first pass rejection off the high side structure over here. Pretty normal around the upper first. But it's most likely going to set a low on any close above 98.24. So I'd say above 98.25. Has the ability to retest this local high area and potentially go on a breakout run. Upper first is at 105.32. I would prefer to see closures above there. That kind of don't. Yeah, I want to see the actual wick lows of the high over here reclaimed, and that would be right around that same region at the upper first. So. And then looking at expansion or continuation on any closures above the upper second, which is above the local high right now, or right at it at 113.61. I would be looking for a pretty darn big move up. You know, momentum is, you know, still it's a false cross. So I had mentioned this the other day. K into the D read initial crosses. For a momentum shift, you want to see, from the Stoke perspective, you want to see a K over the D read to get a Stoke momentum signal. But I mean, you can front run it based on structure, and in this case, low is going to be set on closures above that 98.25 or whatever it is there, then yeah, then I'd pay attention to watch it. It looks good. I mean, like I said, anything above that 618 at 77 to around this low at 73, it's good. Looks good. Divergences, let's find out. No, not yet. I mean, you might be able to fit in some. No, yeah, there's no bullish divergences there that I'm seeing. There's a lower low, higher low, lower low, higher low. I mean, if anything, you just got to be aware of the bearish divergence on the other side. And I should probably correct that indicator to be the correct zones here, huh? So we'll go 80 for the critical. Signal lines, it's lining up for a signal at 102.18. So what was its high today? 104.50. Yeah, I can check the 4 hour. Yeah, this looks good. I mean, it looks like it wants to get expansion. It's in the bullish control zone of momentum. Got a nice, little uptrend on momentum there. Coming off of the lows here. Had a little bit of an inverted head and shoulders even. Yeah, looks good. I think it's hit that target already. If you want to eyeball these, you can take wick to wick, typically. And let's go ahead and like that so you can see it. And then you can, yeah, it's a measured move hit. So right at the highs there. It's an inverted head and shoulders played out. Now you want to see it hold support on this consolidation structure above the basis band at around 97.82, 98 bucks. If it does dip down below there, you want to see it hold this last low, which was a lower low. That created that what would normally be a left shoulder, but it's inverted, so it's a right shoulder. You can play those patterns. I don't mind. Yeah, I'm not a pattern trader, but inverted head and shoulders and head and shoulders patterns are just trend patterns. So in this case, the inverted measured move hit. And I mean, you could even throw a fib on there because they're going to be technical fibs and stuff like that. And look at that. You're right at the 1618 of that fib. And it hit the 888. 1888 rather. But yeah, hit the measured move, looks good. Hold 95.65 to the downside is really where you want to see it hold. That's the lower first at the moment, and then watch that lower second as it creeps up to this low. When that happens, you can take the lower second as a potential reversal area around support. Yeah. Okay. Oh yeah, that's right. You're overseas, Mr. Jedi. You have a good evening. He said I'm gonna fast forward to tomorrow. Good morning, good night. Good night, buddy. Take care of yourself. All right. Any questions before I head out? Let me know. I'll hang out for a minute here and let you guys catch up over there on YouTube. And So from this other chat over here. No, I did low term. I looked at the lower term timeframes for Bitcoin. I can check on them. I'll check on them once more before I head out. I'm going to let chat catch up here. I got one message over here. What do I see in BTC dominance? It's probably headed up, if I had to guess, but I'm going to take a look. So if it's headed down, then I would say that the real part of the move has not started to roll yet, just yet. And it is headed down. On the daily, okay. All right. The dominance is doing something different than what I explained the other day. Typically, you want to see this head up with the move, or head up with whatever the expansive move is on price action. You typically want to see Bitcoin dominance head up with it. That's typical. Doesn't always happen though. This is likely a function of Bitcoin profit taking at the 31.8 overhead resistance that is flowing into alts right now. So total 2 is what you meant. So total 2, yeah. Let me take a look and look at total 2. Looks powerful at the moment. So when looking at the SR levels, there is that high back here that was put in prior to the run up to the upper second standard deviation, your double tap. So you had the high put in, a move back to the basis, and then recovery, and then right back to the upper second, and then run the bands the other way on the weekly. So this area is interesting, as there is resistance there and just above with this lower high over here. So, I mean, you do have a zone of interest on market cap, but realistically, not much has changed. When looking at the overhead resistance, the major areas that I would be targeting for myself are going to be this low over here. But let me take a look, and we're looking at 778 billion, and then you've got the high, the lower high here, closest to price action, or closest to total market cap, that has been the rejection area at 614 to 15. So when looking at that from a weekly perspective, it falls right at this high, right on the wicks, in fact. So you have basically 2 deviations above this resistance so far. You're getting a first pass rejection here towards the end of the week. It is a pretty interesting area, but when looking at momentum, close over close momentum's getting ready to turn in the bearish zone, and it's projected to get a complete cross. So this would actually run counter to Bitcoin dominance. So this is likely, Bitcoin dominance headed down while this is getting a turn, and it's a good thing that you brought this up, because this isn't something that I was looking at the other day. So dominance headed down while total 2 gets a turn up likely means that the entire market looks pretty good, but Bitcoin might take a little pause. Yeah, 700 billion is right up around the wicks of the the back test of this low over here around 680 to 700 billion. I agree. I think what's more interesting to me right now is where we're lining up on weekly and monthly resistances. Now, I will say that the way that Bitcoin is acting in terms of Bitcoin dominance on its move up, and total 2 taking a turn right now on the weekly, and potentially we got to see how the week closes, obviously, right? But we might get a nice move up in general, where I would have to say that I'd be wrong about Bitcoin pairings getting, the short end of the stick there. We might in fact see we've already got a confirmed cross up on the weekly for total market cap, and then total 2 is gearing up, so we might just see a market move up in conjunction with each other. And total market cap is much cleaner looking than total 2, as it is right up against that resistance at 1.28 trillion or whatever it is. Let's take a look. And I'm taking closing resistances here. Yeah, so we got the breakdown, retest, and then we've got our accumulation pattern, and now it's a matter of getting above, and then essentially hitting the spring. I mean, you almost got a Wyckoff pattern here, huh? Yeah, this looks like if it can get above the most recent high on the weekly, total market cap's going to run, and then total 2 looks ready to run from an even lower level. So now Bitcoin dominance, because I wasn't actually checking this earlier in the week, Bitcoin dominance in the context of the weekly is still really stupidly powerful. So alts might run. I still think in the macro picture here that we have a breakout on the weekly of Bitcoin dominance. We would need to get a macro low test, and that's exactly what we might be looking at here. We might be looking at the possibility of a macro low retest, or a macro low test, meaning this is a major low structure right now, and you want to see this do one of two things on Bitcoin dominance here. So we got a move up, you want to see move down, and then move up, right? And then that's where your alts get smashed. The monthly looks freaking brilliant for that type of a scenario right now on Bitcoin dominance. So maybe in the short term or in the near term, alts run a little bit versus their Bitcoin pairings, but overall Bitcoin dominance is it's headed up. It just goes into a macro long form sideways consolidation for the next 20 years. I'm just kidding. I mean, it could, but right now, I mean, it looks pretty good. The only thing to be aware of on this would be a swing fail. So any kind of closes back below here that fail to break back out at 48, 49%. So, and as that relates to total 2 looks pretty good. Still right up against resistance. More about total market cap right now. It's got a little bit further to go, and it's funny thing is on the monthly it's like right up against the basis band. So if we see Bitcoin price action and total market cap, so Bitcoin price action's above the basis band on the monthly, if we see total market cap above the basis band on the monthly, then it's likely that we're looking at Bitcoin hit some of those deeper targets that I've been talking about. If it can close above and maintain closures above 31.8 without being a deviation that runs and breaks the low side of the range that we're currently in. So that would be my criteria. You're welcome, sir. I looked at Litecoin earlier for you, bud. Oh, you had to step out? Yeah, if you scrub back in the stream, I checked in on it again. It did put in a or it has the chance to solidify that area as a low today. So keep an eye on it. I think it's back below 93, which is the last 4-hour low. That lower low before takeoff. That's the one you got to be aware of. Any other questions? And then I'll take like 1 or 2 more, actually, and then I'm gonna head out. I didn't know this. Whatever this is, Streamlabs. I don't know what I'm listening to now. Change that up for a second while I wait for you guys to catch up. Oh, it's late over there. Hey, buddy. Looked at XRP, yeah. Looked at Litecoin, yep. Have I looked at Stinky Linky? No, I have not. I have not. I can look at Link. See what Link's doing. I mean, the last that we were looking at it, it had some areas to the upside that I needed to see it beat out, and what do you know? It has done so. Closes above 680, and this thing's on a little nice trek to the upside for a little bit. Is this the right chart? No, that's a Bitstamp chart. This is a different chart. So it's 6. Yeah, it was the local high. Took it out. Yeah, looks good. This is this was a weekly low, right? Yeah, so it's taken out the weekly low. It got a nice reversal off the downside bands. It's above the basis currently. You want to see it close above the basis on the weekly, and then that extend targets up to around the upper first over time to 736, maybe deeper. To the highs. I mean, where the upper second is at around $8. Yeah, $7, $8. It's got to close here or higher though, like on the daily, and start building that out. It's coming off of a nice little compression on the Bollinger Bands. It's getting expansion. Let's see, is this we want to see, is that expansion coming off of, yes, consolidation. So in this case, it's not a mean reversion play. This is an expansion play. You got to see it close here, and then I would say, confirmation would be the moving average pointing up with it, but closing above the upper second, you're going to see probably some volatility. But if it just green candles its way up, then that's at 676, 680, which was a support resistance area that I had marked on that Bitstamp chart probably ages ago in this consolidation. So it looks good. I mean, I can't argue with a nice uptrending structure like this. But it really does need it cannot close. I would not want to see closures, I would say, back below that 650, 660 region to maintain the integrity of the run immediately, or the immediate expansion. So you don't want to see closures back below the upper first, back towards the basis band, as that would nullify a lot of this potential upside expansion continuation. Realistically, as long as it's above the last wick low and this close over here, and that last wick low is at $6 and the close was at 608. So as long as it's above there, it's looking fine. This is a nice little breakout on expansion. It's meeting all the criteria. It has even broken out above the 681 area, which was a lower high on the daily. Starting to work its way into these lows over here. Next big low on the daily. Let's look here. It's got to be recent, so it's taken this low side structure, I believe. Yes, it has. It has tested this low side structure. It's taken this low side structure so far. if it can close above this low here today, which it's basically right at, which is 690, I would, I'd extend targets back. I'd extend targets up to this consolidation up here. Basically, the consolidation highs is kind of a zone around, the low $7 region to 750, basically that wick high there. Yeah, and that actually matches this the look on this weekly. So, that's where you can draw your correlation from, is this weekly kind of splitting the difference in that consolidation zone around, the low 7 to 750 area. So in this case, it's coming in at 736. So that'd be the next target area to look for. So I would say, for me personally, if I was trading Link, I would take the I'd have like 3 areas of interest to the upside here, and then click all the wrong buttons in TradingView to actually get to the tool I want, and then say, okay, this is kind of the area that I want to see recovered in the medium term to the upside, but it's got to start somewhere, and it is starting here. So I would just be aware of that area, and then I'd want to see, essentially what I'd want to see is expansion up that takes this area, whether it plays in this area and then, does something like that, or it heads up above it and then finds it as support. And the support is the entire area. It doesn't just have to be the top side. It can be the bottom side as well. So either get above it, come back and retest it as support, or get above it and retest the top side. So, or knock around inside of it and just hold it as support, build it out. And that would be, this here would match more of the daily Bollinger Band set, by the way, what I'm drawing here. Because you can think about it like this. You can think about it like the basis band, rises, right? And then you're looking for expansion of the second and third to the upside. And then you want the lower second to sweep up. You want these to head down and then sweep up. So that would be kind of like what I'd be looking for from the volatility perspective. Looks good though. Good for Link. Get a nice little pump right into resistance. Now in the short-term time frames, I have no opinion because I haven't looked at them. I see a question over here. Short-term time frames, 4 hour. I mean, it's getting expansion. I mean, it has not yet peaked. Moving average is chasing. I do suspect that there's probably going to be some lower-term time frame pullbacks, but as long as it's above the moving average here, which is likely going to stay that way, close over close, for at least through today's closure into the early part of tomorrow, and then come back to it and reevaluate. So yeah, a pullback here, messing around in this area in the lower term time frames makes sense. I mean, the 15-minute coming off the highs here too. So I mean, essentially what you're looking for on momentum would be like a reset, right? That holds. What is this singing? What is going on here? I don't want singing. And in this case, that support area that I would want to see held from like a 15-minute chart is consolidate above, the breakout basically at 660, 650, where the lower third is coming in currently, but these are going to contract pretty quickly soon. So you can take an hourly and say like, as long as it's, the basis is at around 655. So as long as it's above there, looks good. This also puts it above this last little consolidation before the move up, which would be the local trend breakout. So you've got breakout back here at 632. That was still within a wider consolidation, right? So this was your key level at 632 over here, came back and sat above it on, right around this low reclaim, and then break out that structure, and get an impulsive move to the upside. So above the upper first to the basis looks good. If we see this cool down really heavily and get a contraction, you want to basically see it hold the lower first as long as it's above this low, and the lower second on a close, meaning not getting expansion to the downside below the lower second as long as it's above this last low. So you get your dynamic volatility supports that I wouldn't want to see violated. Okay, that's probably going to do it for me. I'll wait just another second here. I'm going to get going, go eat some late lunch at this point. And then I will be back later with a Bitcoin in 60 seconds video. Unless anybody has any questions or wants me to clarify anything, let me know. Yeah. Doggy coin. We can look at doggy coin. I'll do it. Yeah. No. Don't worry about it. You're still playing catch up with me, but yeah, like I said, I'll take one more here and then get going. So it's got to break out above the breakdown. That's gonna be your $8 region on the daily, or $8. It's like 7.5 cents. So not interesting to me personally until it's breaking out above 7.5 cents, almost exact 7.1 cents or whatever. I mean, if you're taking the low, if you're already in from the lows, is that what you mean? I mean, it makes sense. Okay. This is not financial advice, but you need to take profit. If you're in a good, advantageous position in your trade, pay yourself for it. And if you're having trouble understanding how to take and where to take profits, take them at the major resistances if you're in a long. If you're in a short, you take them at the major supports. Right? In this case, it's below the upper second. It's showing the potential for further upside, expansion into that 7.5, possibly more area, but it's got to reclaim the lows, right, on a close. So that's your 7 cent area or so, 7.05, and then you can evaluate this. This isn't a logical area to take profit in, right? That doesn't mean you don't necessarily have to close your entire trade. Again, this is not financial advice, but you got to take profit. You got to pay yourself for being in that position, especially because if you're long right now, you're probably paying exchange fees, funding fees, right? Especially if you're on leverage. And it makes sense to take profit in these areas. And you just structure it so you don't have to close your whole position. And in fact, you can just set your stops flat, and on any kind of move back down that looks to you as if it's going to be a continuation to the upside, you know, on a lower term time frame, like an hourly or something, or maybe a 4 hour, it comes back down, gives a little bit of a retrace, gives some of this move back on, let's say, the hourly, right? As long as it's not violating the breakout low here at 6.5 cents, it looks good. To me, I haven't been tracking Doge for a little while here, but realistically, I from its current position, I wouldn't want to see it retrace from here back to the basis at this current moment. But if it did, I would say above the 382 of this particular move up, which is a 618, just invert your fib, then I would say I'd evaluate and see if it puts in a low there. And if it did, you could always size up your position with your stops flat. That becomes your new stop loss, because your your entry would be raised by doing so. But you got to evaluate. It's a personal thing based on your account size, based on the way that your risk profile. But yeah, I mean, take profit, pay yourself. If it looks good for further upside, you just size back up and you walk your trade up with it. And you can do more advanced stuff like hedge on the other side. It seems like a logical area to take profit. Maybe you open up a smaller short position to hedge your long or something like that. You bracket it, and then you set stops flat, and whatever way it runs, you let the trade run, right? Just close one side or the other automatically with stops flat. So that would make sense, right? But you know, for the move, powerful above 6.85 or 685 or 6.85 cents in this case, which would be in and around that upper first standard deviation on the hourly. Hit some pretty big extremes here. Stoke is down. It's starting to go into a volatility cool down, so that's where you could maybe evaluate structure on the 15-minute. Looks pretty good. Looks like it's lining up for a possible, it's not ready yet, but it's from the candlestick perspective, it's lining up to set a low here. It's just a matter of, can it turn Stoke? Can it then, get above, the important areas of the basis band and the upper first to start giving it a chance to retest these highs and maybe higher. So, but it's all relationary, where are you on the hourly? Where are you on the 4 hour? And 4 hours still getting expansion. So this would tell me that the move from the 4 hour perspective is not over yet. So, but yes, basically what I'm saying is if it were me, this would be my logical area based on what you just told me where you were positioned, where me personally, with my risk profile, I would take profit here, and I'd probably have, typically I have 3 take profits. First take profit is to cover position fees. I don't think you have to worry about that. So usually first take profit is just your take profit. Second and third take profits. Typically at the second take profit, that's like my main take profit area, wherever I have that level set in accordance to my risk management framework. And then from there, third take profit is what I refer to as a let it run or build. So that means if it comes back and I'm usually at my last take profit area. If it comes back and I'm in a long and it's bullish and it's above my entry, of course, then I will size up again and then just do it again. Same on the other side for short positions. Is that helpful? Okay, yeah, you're still catching up. I'll give you a second to catch up. Let me know if that was helpful. I feel like you guys are running further behind as time goes on, as the stream goes on. Let me go over here and look. Yeah, I feel like the delay is increasing. I mean, that's normal stuff, but it should be fairly consistent. All right. Okay, yeah, I answered your question. Good. Again, not financial advice. It's all going to be within the context of your trading plan. Your account size is the major factor in that. Your risk profile that you've worked out would be your main deciding factors there too, which is usually dictated by your account size. Yeah. Okay. Well, that's going to do it for me, guys. Thanks for hanging out. I do appreciate it. And I will be back later with a Bitcoin in 60 seconds video. And yeah, just enjoy the trades. If you do have any questions, go ahead and hit me up, you know, here on YouTube. You can always leave it in the comments. I've been getting emails. You're welcome to email me. I'll try to respond to it, either by sending you an email back or, or, you know, answering a question, especially if there's more than one person asking the same question. I'll answer it on a stream or in a recorded video, or hit me up on Twitter. Twitter DMs are fine. Or just, you know, tweets at me. All good. I'll be doing more of this, so more live stream stuff. I'm gonna have a structure as well soon for the live stream. So kind of right now it's free for all, just hangout time, but there will be a structure, especially if the market really does start moving to the upside. And even the downside, as I do think that will present opportunities. And then we'll go, and they'll go from there. I want to get, oh, yeah, last thing. For anybody that knows programming, I do obviously know people in the community that program, but they're not, they, you know, have a real job and a real life outside of this, unlike myself. So where this is my entire life, I have an application, a little Python application that I had made that is basically altcoin roulette, and it just pulls 10 random altcoins from Binance's API. API calls called Binance, pull 10 random altcoins, and then you click a button and it selects one of those 10. I'm having some major bugs with it where it's not refreshing and pulling new sets of 10. So if anybody does know any programmers who just want to give me a tip on that code, that would be awesome. And then we'll play altcoin roulette. I think it'd be a good way to find interesting altcoin charts. So, but with all of that said, you know, I hope that you all have some good trades in. I'll have the Bitcoin in 60 seconds video out later. And if you don't see it pop up in your feed, hit the bell thing. I'm getting a lot of people going, I didn't even know you were uploading the past few days. I didn't see it. It didn't notify me. It wasn't in my subscription feed. So go ahead and hit the bell for notifications. And then also check my main Twitter profile. Or if you, there's also the Twitter community, Landy's Crypto Corner. They have a community feature. You can always just join in there. I usually will repost a link to the most recent video. And then I will post any kind of analysis or additional information like this stream underneath those posts in a threaded format. So yeah, you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. Thank you for the thank yous, and I will talk to you guys soon. I believe one of you had mentioned something about a place where you admin, and there's a person who, the gentleman does live streams on Sundays. Hit me up when he goes live. I believe that was Jim, the Jim of all trades guy. So hit me up when he goes live. I'd like to jump in there. I have missed every other one, but I was already subscribed to the channel. So yeah, you guys take care. I will talk to you soon. Landy out.